the date of acquisition, following balances were appeared in the books of Sita PLC. General reserves 800,000 rupees, retained earnings 1 million rupees. Now let's go to the working. Acquisition date is 1st of April 2015, reporting date 31st March 2016. Stated capital, date of acquisition 12,000. General reserve, date of acquisition 800. Retained earnings, date of acquisition 1,000. Reporting date, stated capital value is 12,000. General reserve, reporting date 800. Retained earnings, reporting date 1,600. Date of acquisition, total value is 13,800. Reporting date, total value is 14,400. Stated capital, no post acquisition. General reserve, no post acquisition. Retained earnings, post acquisition is 600. These values are post pre-acquisition. This value is post acquisition. Now let's go to the goodwill calculation. Investment is 15,500. Stated capital, date of acquisition, stated capital is 12,000. General reserve 800. Retained earnings 1,000. Revaluation reserve is 200. Total value is 14,000. Karma PLC acquired Sita PLC. Controlling interest 75%. Therefore, 40,000 multiplied 75%. This value is 10,500. Therefore, goodwill value is 5,000. Now let's go to the statement of financial position. Non-current asset, goodwill is 5,000. Now let's go to the non-controlling interest calculation. Stated capital value is reporting date value, stated capital 12,000. General reserve value is 800. Retained earnings value is 1,600. Revaluation reserve value is 200. The total value is 14,600. Karma PLC acquired Sita PLC. Controlling interest is 75%, but non-controlling interest is 25%. Therefore, total value is 14,600 multiplied. Non-controlling interest percentage is 25. This value is 3,650. Now let's go to the statement of financial position. Non-controlling interest 3,650. 1,000. Now let's go to the statement of financial position. General reserve balance is 2,000. Now let's go to the consolidated retained earnings calculation. Parent company retained earnings balance is 3,950. Retained earnings subsidiary company balance calculation. Post acquisition is 600. Multiply acquired percentage is 75%. Therefore, value is 450. Finally, retained earning balance is 4,400. Look at. Thank you. My part is over. I invite you to listen me for the next part. Thank you, Hansini. I have third question. Let's discuss. Impairment takes carried out on 31st March 2016 and identified that the goodwill on consolidated had been impairment by 1 million rupees. Next, double entry on that question is impairment expenses debit 1 million and goodwill credit 1 million. Impairment of goodwill reduced by 1 million under the consolidated return earning. Now let's see how it shows up in the statement of financial position. 1 million is credited to goodwill under non-current assets in statement of financial position. Goodwill total value is 4,000. Next, Sahiru will discuss the next additional information. Thank you.
Thank you, Bismi. Now let's look at fourth additional information. Padma PLC sells goods to Sita at a profit margin of 20% on cost. 3 lakhs worth of unsold stock purchase from Padma PLC was included in the closing inventory of Sita. Then let's see how to calculate this. Cost is 100, profit is 20, selling price 120. Now we calculate unrealized 300 divided by 120 multiplied 20. So answer is 50. This answer consolidated income statement debit 50, provision for unrealized profit credit 50. Provision of unrealized profit credited 50 we show under the SFP. This debited 50 we show under the consolidated return earning reduced 50. Now we for the consolidated return earning answer is 3,350. This answer we show under the SFP return earning. Next, Gimhan will discuss final additional information.
Thank you, Saju. Next is the final additional information. The difference of current account viewed as cash in transit. Now we will see to calculate this. First we have to deduct current liability from current account balance. Then we can get 100 rupees as the cash in transit. Next we have to debit it cash in transit account and have to credit it current account. Finally we can mention the 100 rupees as the cash in transit in the consolidated statement under the current assets. We show exactly 100 rupees. Now my part is over. Next, Sahil will continue this for more.
Now let's go to the statement of financial position. Inventories, Padma PLC 4,800 plus Sita PLC 2,800. Inventory total value is 7,600. Provision for unrealized profit 50. Trade receivable Padma PLC 7,250 plus Sita PLC 3,975. So trade receivable total value is 11,225. Cash transit is 100. Cash and cash equivalents. Padma PLC 1,100 plus Sita PLC 1,325. So total value of cash and cash equivalent 2,425. Under the equity stated capital 40,000. Bank loan Padma PLC 5,000 plus Sita PLC 1,000. Total value is 6,000. Under the liability, trade payables, Padma PLC 7,925 plus Sita PLC 1,400. Total value is 9,325. Accrued expenses 650 plus 140. Total value is 790. Tax payable 275 plus 110. Total value 385. Now current account total value is 21,300. Now total assets value is 65,500. Now total reserve value is 5,300. 350. After that, this total value is 49,000. This value is total equity value. Now we calculate total liability value, 16,500. Total equity and liability value is 65,500. Finally, we can see Partner PLC Group, the statement of financial position. Total assets 65,500. Total equity and liability 65,500.